Hello everyone, I should have done this video quite some time ago. This is Nathan from Queens, the original Ultimate Trader, Ultimate Traders on Reddit. So like I said before in some other videos, I try to let my posts say it. I tell my Elite Traders group as well that if enough people ask me a question and then believe it'll help other people on YouTube, other people on Reddit, other forums do it, I will try to answer any question. If it's not that important, or it is important, but it's something that I can just address with you yourself, I'll just address it with you yourself. If it's something that I believe will help other elite traders, other ultimate traders, or people in general, I'll address it. So actually this comes quite often to me about what to watch for in a stock, how to pick a stock. One of my elite traders, he's a good buddy of mine, asked me about what I think about a certain stock that isn't making money yet, but it might go in the future. So the first thing I do if I pick a stock, any stock, and it does depend if you're looking long-term or day trading. So my objective is to day trade. So in other words, every single stock that I buy, my objective is to sell that day, today. Now, of course, it doesn't work out that way. But in the morning, around 7:30, 8 o'clock in the morning, when I choose my plays and I put the symbols into my plays watch list, those are stocks that I'm ready to play right now that are supposed to turn over today. Now, occasionally they do turn into a swing trade. When they do, normally it's maybe 2-3 days, sometimes longer. The reason why I say that is because if you have an outlook of a month, 2 months, or a year, then it's a lot different. So if, and a lot of these stocks that I'm trading that are on any of my watch lists, like when I have time, I take a look at the last 4 earnings reports. So I look at the last 4 earnings reports. With the last 4 earnings reports, good. They go up each quarter. Were they better the year over year? And then I check cash flow, because you can have a company that's losing money right now, but their cash flow is increased quarter over quarter. Their sales have gone up quarter over quarter. Their margins, which means their percentage of money that they can make, have gone up quarter over quarter. So if you choose to buy a company that loses money, so the great thing about that, it's not great, but you stand to make the most profit by far if you get into the game in the beginning. So because I mentioned this other stock to everyone on Reddit before, it was one of my last mentions before we got an elite group. It was EZGO, EasyGo. So EasyGo is losing money, but not a lot of money. A little bit of money, but growing sales at 230%. Their margins are pretty high. So you take that, you take a look at the last 2 quarters on the reports, they've been destroying. Sales have gone up, margins are high, and they're losing money. So with that, they should be profitable in the next 1 or 2 quarters if you go on the same trend. So it's okay if you want to pick companies that lose money, but if they're losing money, they should be losing less. Now for me personally, when the market is choppy, like right now the market is choppy, I stay away from companies that are growing. For instance, like a VRM of Room. So that was in my plays list, and it actually dropped down to 26. Now it's $41. But basically the company was losing money and growing at 40%. So Room, I like Room, but when the market is choppy, I don't put it in place. Same thing with the firm, AFRM. The company is growing like 70%, 80%, but they're losing money. So when the market is bad, it's hard to buy those stocks that are not making money. I have other videos, I have posts about what happens to companies that are losing money when the market decides to turn. Now the difference is when the market is going up, everyone loves the market everyone believes they're right. Everyone thinks they're a genius. They could time everything. They do not make bad trades. Why I'm saying that is because they come in and bid. They hear a name and they come in and bid. They hear Snowflake. They see it on CNBC. They go in and bid. And more people bid, the stock goes up. Now, even though the company is losing money, sales are not that great at Snow. I'm just saying the facts. They're not that great at Snow, and they're losing money. By people coming in, they bid it up. So when the market is green and everything is going up, people just come in and bid. They bid anything. They bid companies that are especially like a firm that are growing rapidly but losing money. Because at that point in time, it doesn't matter if the company makes money. If it's growing, someone's going to come in and buy it and pay for it. And sometimes, I hate to say this, money managers go after the big names, because when the public hears the money manager saw DocuSign or Teladoc, they invested in these big names. What do? They throw money into the fund, or they pick the ETF because they're like, oh, I know that name. This money manager likes that name. I like that name too. I'm going to put money with the money manager. So the problem with that is, if the company is not making money, losing money, and the market turns, are you going to go back to the money manager when the stock is divided in half? Because that can happen. Or the stock has gone down 75%? Because that can happen. Because if the company is not making money, you got to pivot and get out. So once again, this video, it's not going to be much longer. Once again, this video is about what I choose to look at when I decide to buy a stock. So I look at the last 4 earnings reports, and I determine whether or not they were better than before. What was the stock at a year ago? What was it at 2 years ago? 2 years ago, when the stock was 20, how has the earnings been? If the earnings had been amazing and the stock is 10 now, more reason to buy. If the stock was at 50, now it's at 100, and the earnings were good but not great, maybe I don't even pay 100 for it. Because the stock already doubled. Did earnings double? Did sales double? What just happened? So those are things I look at. It's okay to buy stocks that are losing money if you really believe the stock is going to come back. Well, the company's going to come back and make money. Because once again, the stock and the company are two different things. Just because the stock is on fire does not make the company. They're completely different things. A company could be doing great and the stock is in the dump. And then the stock could be doing great and the company is just terrible. So they're two different things. So it's okay, but see the trajectory. See the financials. All right? Have a great night.